What's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Hey, you know already what to do. If you're new to the page, go ahead and hit the like, subscribe, and then a notification bell. Never fall for any spam. I don't have a WhatsApp. Never send money or crypto anywhere. Anything I say is not a suggestion for you to buy, hold, or sell. And make sure you check out all the links below at the end of this video. So my voice, I'm in my Barry White voice because I don't think I had enough cup of coffees. All right. So let's get right into what we want to talk about very briefly today. Let's look at this. I'm titling this video, Only the Strong Will Survive. Right. So this came out yesterday. And it reads, investors should sell into any rally into the stock market as 76% of the NASDAQ enters bear market territory, Bank of America says. All right. Now, this is what Bank of America says. OK, it does not make it law. It does not make it real. It doesn't mean it's going to happen. These are just some of the things that they say, but it's worth looking at. All right. So let's read a little more and then I'm going to show you something else. All right. Instead of buying the dips, investors should be selling into the rips into the stock market as the Federal Reserve begins to raise interest rates into a bear market. All right. Bank of America said in a Friday note, we believe the bull era of central bank, Wall Street inflation, globalization ending in a bear market of government intervention, social and political polarization, right? Main Street inflation and geopolitical is Islam. I can never say that word. Y'all can read it. Starting Bank of America, this guy, Michael, whatever his name is, okay? Hernett, right? While the major stock markets averages are not in a bear market. So let me read that again. While the major stock market averages are not in a bear market, Bank of America notes that most individual stocks are already in one, okay? So most individual stocks are already in one. According to the note, 70%, 76% of the NASDAQ stocks are, and 51% of the S&P 500 stocks are at least 20% off their 52 weeks highs. Okay, so let's read again. The NASDAQ 100 briefly entered into bear market territory on Thursday, falling more than 20% from its record highs before staging a sharp reversal as investors digest the implications of Russian attacks of Ukraine. All right, you guys get it. All right, you see where they coming from. So they're saying sell like when we have days like we had on Friday. But what they failed to mention is you should have bought on days like Tuesday when it tanked. All right. So if you guys saw, I shared with you guys, I did a lot of buying because generally when there's a war, history has proven the day to buy stock is the day a war starts, not to be selling stock. So we want to make sure we move at the right time. So you say, hey, you know, this is a good point. We could be going into a bear market, right? I'm sorry, we could be going into a recession. So I want you to look at this. How long does the average recession last? About 11 months. The good news is if we can call it, all right, is that an average? A recession lasts about 11 months, all right? Says the NBER. Okay, so about 11 months. So now taking all of that data and extrapolating it, we should be asking ourselves, where are we buying these stocks? As you see, most of your portfolio is already into a bear. You've been buying in, well, they're in bear market. So you have to ask yourself, stock by stock. I'm not a fan of what, the other YouTuber did by selling all. I'm a fan of looking at each individual stock that you have. Okay, look at all of your equities individually, including crypto, and see, did I buy it at a high? You can clearly look at them. Go to a chart, right? Go out the last 90 days and see, did I buy these at a high? I would go out 6 months, and you will clearly see, did I buy these at a high or did I buy these at a low? Okay. And you should go into your portfolios and look at each individual stock. Now, if you've been buying these dips and you've been buying stock, especially on Tuesday, that you bought that's already in a bear market, then all you have to do is wait. A lot of people will eventually give up because you're taking a beating and you're just going to say, I'm just going to sell because I only have a little left. I'm down 50, some 60%. I'm down that much. So I'm going to take the little money and run that I have left. But it is my mindset, remember, this is me, that I'm buying more into the bear market because I am buying at a discount. And only the strong will survive. So if we do go into a recession and we do have yet another 11 months, that does not mean it's going to last 11 months. But if we do have a recession and we go into 11 months, maybe 6 months, I'm cool with that. I'm going to continue to buy during that bear market. Remember, the longer you're in bear market, the longer you buy in a bear market, the longer you're buying stuff discounted on a sale, right? But you have to make your own mind up on where you bought any individual stock. Remember, this is not one size fit all. I want you to go and look at your individual portfolios. And in closing, if you're up on oil, if you're up on banks, now's the time to start figuring out when will you be selling and take profits. I will also say that when you're buying through this bear market, it's not really focused on what stock, but what industries. Okay. So if you know things are on discount, some of the moves that you will make during this bear market that we are currently in, some of the buys and some of the purchases that you make right now, I'm telling you, in a short period of time, you will be up 50, 100, 150, 200% in a few years. Okay. If not in a year. If the market rebounds and we go in a bull market, you look at some of these stock like ChargePoint, it's nothing for you to be up 100%. All right. So SoFi, it's nothing for you to be up 100% in a year. All right. So if we don't go into a correction or recession, or the recession is pushed back. All right. So I want to just leave that with you guys. Only the strong will survive. Only those of us that are going to continue to buy, and we're going to ignore the red, knowing that we have good growth stock that are going to recover strongly when we're through this. All right. So you guys keep that in mind. Look at these industries. Look at EVs. Look at charging stations. Look at fintechs like PayPal's and all of that. So look at EVs. Look at fintechs. Look at cybersecurity, which is it's hot right now because of the war. Look at the things, technology that is going to be booming, and now's the time to buy. All right, good people. Hey, as I forestated, make sure you check out all the links below. And now's the time to be brushing up on your tools. I suggest now learning new broker platforms, learn how to use those, because now is the time for you to not have one, but I would say 3 and even 4. And what I suggest is have a broker for swing trading and have another broker for long-term investing. Stock. Have a broker for crypto swing trades and have another one for crypto long-term investing. Because when these moves happen really quickly, you can go right to the right portfolio and make your plays. Just learn how to use them. They're all very similar, good people. Hey, I love you guys. I'm going to cut it off right there. Live, love, laugh, and learn. Have a blessed weekend. We'll see you later.